Okay, we're going to be doing a super quick trade recap. I'm going to try and shorten these up and make them as simple as possible because I know that you guys do not like sitting through a bunch of filler. So coming into today's price action, we had a very bearish model. We had CPI news today, 8:30, taking out London highs over here. London high was swept, data highs was never reached and taken out. You can see that we had this SMT at our 9:30 opening in price here, pre-market range SMT. We ended up chopping down. This is on ES as well, guys. Price was chopping lower and lower, respecting, leaving highs, creating this low resistance liquidity run right here. Low resistance liquidity run trend line. We can see price continues to respect PD arrays as we move down the chain of this sell model. Upon our 10 a.m. Silver bullet reversal to continue our bearish price, we had this reversal swing here, which we can use to protect our standard deviation for the silver bullet run and for the rest of AM price action, because everybody knows that the 10 a.m. is the opening for the 4-hour candle. So this is the 4-hour candle wick that would manipulate highs to continue running lower. We had a 1-minute inverse value gap that gets respected here. So I like to think of, as we move down the range, I like to think of it as a price range that is attempting to get bounced. So that's how you keep in line with the trend and how you keep yourself from getting over retraced and stopped out in a trade. So all this pressure here needs to be retraced to. That's what this is. Boom. So all this price from here to here is balanced now. We're going to move down this chain of price. Boom. We leave this SIBI right here. Price comes up, taps into it. It is now balanced. And you can see as we tapped into this price, we took out some internal sell side. This was setting up a macro run for us to reach these data lows. So that's why we had this internal sell side run here. Also, if you look at it based off of each range as a premium and discount range, you can see each time we make this new range down and create a swing low, we have to run back into some sort of premium before we can continue lower. That's exactly what we do. Even on these very small swings such as this, you can see if you take it from top to bottom swing, price must reach this premium before we can continue to lower prices. Let's continue watching price balance itself out. 1 minute fair value gap tied in with this 1 minute BPR balance right here. Price should not reprice back into this level. We have another 1 minute inverse fair value gap right here, which is initially where I wanted to take my first trade, but I ended up missing it. And this is where price gets rebalanced. This is a perfect mech model setup, and I'll explain to you guys why. So we have this 1 minute fair value gap right here, which gets respected. Right after this fair value gap gets respected, we inverse a fair value gap. This is two confirming PD arrays showing that price wants to see a lower delivery. Right here, you should be able to short the market as soon as this candle closes. Stop right here above this high, because price should not retrace back above this level, considering that this price range has already been balanced by this series of up-close candles. I unfortunately missed this trade, which caused me to get into sort of a revenge trade mentality, which caused me to lose my trade today, and I'll explain why to you guys. You can see exactly at 11 o'clock, we ran out our data lows during macro right here, exactly the 11 o'clock candle. That is not an accident, that is always on purpose. And you can see these data lows are right inside of that 2 to 2.5 standard deviation range from our silver bullet swing. Once again, these are not accidents, these always happen on purpose every single day. Think that price action is bad, you think price action is choppy, you simply are just not educated enough. This is not a dig at you to say that you are a bad trader. It is to say that you are uneducated and unwilling to learn. Simply using the excuse price action is bad, price action is choppy right now, price action is low probability. There are low probability times when the market is not in an ideal scenario for you to take a trade. However, there's always opportunities every single day. Even if it is a no news Monday and you think that there is no probable price action, I guarantee you that there is. You are just uneducated. Here's my trade that we took for today. We can see from our silver bullet price reversal, we had reached the 3.5 to 4 standard deviation range right here. This means that I should not have taken a short inside of this probable reversal range. You can see price did continue lower, but that doesn't mean that price did not get some sort of reaccumulation at this level. Moving in a little bit closer, you can see we had a 1 minute SIBI that price respected, directly inversing this 1 minute BISI, creating a mechanical model. This is where I went short. I wanted to see this swing low right here, get ran out by liquidity, but I was not fully locked in and I was not fully in the right trading mind. And let me tell you all the mistakes that I made on this trade and why I got stopped out, even though we have a probable mech model aligning with the overall bias. So I'm going to create a little mistakes tab right here so we can all learn from my mistakes. That's the purpose of these, and it's to teach you guys where I go wrong so that you guys do not make the same mistakes as me and you guys can become better traders. So mistake number one that we made. We shorted at a low. This is a low right here. Where did my drawing thing go? What the fuck? We have our swing low. Look at how close we are to the swing low. This is not a probable trade zone. You do not want to short the lows. We're going to go to mistake number two now. Mistake number two was we did not short in a premium. The idea of buying low, selling high does not happen at finding the tops and bottoms of daily moves. The idea comes from finding premium and discount ranges. The idea behind a short trade is that you short inside of a premium. A premium is when price is above equilibrium. If you take our most recent range, would be from our retracement right here. If we look where I took my short, price had not delivered back into this premium of price. That is a reason why price wanted to continue to chop higher. Because look what happens conveniently after we reach in this premium of our range. Boom, huge displacement towards the downside, in versus BPR, in versus access point, come up, tap into it, reject it down, right back to the lows where we wanted to see price deliver to. So that was mistake number two. We shorted inside of a premium. Mistake number three was I did not control my emotions. I missed a previous trade, causing me to take a revenge trade. The initial trade that I wanted to take was this mechanical model right here. I did not take this trade because this candle close was too low for my liking, and I did not take it, which obviously we can see caused price to boom, run down these equal lows. I did not suspect that price could 100% reach back down to take out these data lows, even though it was the obvious draw on liquidity. So I did not take this second retracement right here back down to these lows as I could have. If I was willing to put more risk on, I totally could have taken this trade. However, in my scenario, I was not willing to take this trade. That is not the trade that I'm upset that I missed. I was upset that I missed this super obvious mechanical model down to these super obvious equal lows. That is why I took a revenge trade down here. I was just looking to make some profits on the day. I was looking to get up. I was looking to make back what I felt that I had lost. Even though there was no risk on the table because I did not take this trade and I lost no money from not taking this trade, I felt personally that I had been disrespected by the market and that I had lost on my, I lost myself and I lost my feelings. So I took kind of a greedy revenge trade on here, which ended up costing me in the long run. And it will happen to you guys as well if you are not able to control your emotions. So that is the three mistakes that I made on my trades today. Shorted at a low, we were not in a premium when I shorted, and I did not control my emotions. So if you can take anything away from this video, look at these mistakes and make sure you apply them to your own trading. I appreciate you guys taking the time to watch this video. I'll be back tomorrow.
Get cold, rocking diamonds in the city. Told my niggas stay solid, cause we in it. Life's a game, bitch, I'm just trying to go in it. Or does anybody hear me?